Hello, hello. Fugu here from CRE8R DAO. I'm here with Seb, the dev or the lead dev and the founder of Gains Network. What's going
Hi,
on, Mr.
everyone.
Seb?
Doing great.
This is our second interview together. I had the pleasure to interview Seb several months ago, hear about all the cool and innovative things that are going on with Gains Network. But for the people who have not yet listened to the first interview or don't know what Gains is, can you give us the TLDR?
So Gains Network aims to build a suite of projects in DeFi to offer the best UX possible. And our first project right now is gTrade, the decentralized leverage trading platform on Polygon.
Very nice. I've personally used gTrade and it's a great trading experience. I really enjoyed it. And some other DAO members have also used it and they all said positive things about it. Can you just give us or the listeners an idea of what exactly gTrade is, how it works, and what you could do on it?
So it's a decentralized leverage trading platform. It means we have the same use case as, for example, Binance perpetuals. So if you want to have more exposure than your capital allows you, for example, if you think that Bitcoin will go up a lot in the short term, if it goes up 1%, for example, you want to make 20% on your capital because you are very sure and you manage your risk. For example, if you are wrong, you will cut your loss very fast. Then we offer that, and we do it even better than centralized exchanges and even decentralized competitors, because we have a fully synthetic architecture, and that allows us, so the biggest positive points about this architecture, I can go in the details in how it works after if you want, or maybe not, because we already talked about it in the previous AMA, as you want. But the biggest positive points are the lack of funding fee, because we are a synthetic platform, so there is no need to do an equilibrium between the longs and the shorts, since we don't generate our own price. So there is no funding fee, which can be like 30% per year often. There is no borrowing fee either, because we don't borrow capital for the leverage. There is no price impact, which is pretty huge. So no slippage when you open or close a trade. We have the lowest trading fees. We have guaranteed stop losses on cryptos, which is pretty unheard of. It's a thing we invented ourselves, which only our architecture allows. It means even if the price dips very fast below your stop loss, it can only be triggered at the price you set. And there are certainly more things that will come to my mind, but these are the biggest ones in my opinion.
I think this is the point where maybe the alpha can be dropped. We're doing this AMA in anticipation of a big event that's coming up. From what I know and from what I've seen, right now, if you go on gTrade, you can trade mostly only either crypto assets, synthetic crypto assets or derivatives, or forex. So that's different fiat currencies. But there's something coming up, I believe.
Yeah, so we are glad to announce. So by the time this video will be out, certainly it will be already be announced, or maybe it will be at the same time. But we are glad to be able to offer the first 3 stocks on our platform now. So we've been talking about it for a few months, and now it's real, it's on the platform. You can already trade Apple, Google, and Facebook or Meta up to 150x leverage with the same conditions as our other pairs. And that really shows the strengths of our architecture, because we only had to find a few good APIs, and we could leverage all the existing liquidity we have. And now we can offer pretty much any US stock. And we started with these 3 ones, and there will be a second big launch of 20 stocks a week after the first launch. And we are really glad to be the first project in DeFi to offer this. I think this is a really big step, and it's a really big innovation. It's really amazing. Like you couldn't even think about this 1 or 2 years ago. And now you can trade the price of stocks on chain with leverage while keeping custody of your funds on your wallet, and no need to register or anything. And I think it's pretty amazing, and it's a really big step for DeFi.
That sounds really, really cool. I mean, I'm looking forward to the launch of this. And I just wanted to, I guess, clarify for the listeners, or for you to clarify for the listeners, if I want to do stock trading on Gains Network, what exactly am I doing? I'm not buying an actual stock, right? I'm just buying a derivative. And what am I buying it with?
So technically, you are not buying anything. You are sending your DAI to our smart contract to bet on the price, and you will receive DAI based on the outcome. So either you were long and it went up, so you receive more DAI than you had. And the opposite, of course, if you lost, you will receive less DAI. And if you short, it's the same. And it calculates it with the leverage and the price movements. So that's why we are a synthetic platform. And everything relies on our GNS token and the liquidity in there. So the leverage is fully synthetic. You don't actually borrow it. It's simply calculated in the smart contract, how much you won or how much you lost. And our smart contract will send you the corresponding DAI amounts directly to your wallet. And we leverage our GNS DAI liquidity and our DAI vault to offer this kind of leverage trading with all unique positive points we talked about just before. We can do this on pretty much any market, since we can just plug the APIs we want. And for example, we already have the most cryptocurrencies of any decentralized platform, and I'm pretty sure we have even compared to centralized exchanges, we have a very good offering. We have more than 45 pairs, I believe now, and 10 forex pairs as well, which is quite unique. And now we have stocks, and it's really only the beginning. So, and we can do even crazy stuff, like we talked about cross pairs between our trading pairs. For example, the funny one we mentioned every time is, Tesla and Doge. So if we divide one by the other, we can get Tesla priced in Doge, or we could get, I don't know, Google priced in BTC. That opens the door to really a lot of cool stuff, and that I think that shows we're on the right path with our architecture.
Are you suggesting that anything with a price feed could be traded on Gains in theory, or gTrade?
Yes, exactly. It's just has to be like it has to be like not easy to predict with 100%, or let's say, for example, I don't know, you put I mean, you could put anything on gTrade. You could even put the temperature, but since you can just use websites to predict it, then you can just win every time, and it wouldn't work with the platform, of course. So it has to be markets, and somewhat efficient markets, where at least as many traders lose as they win. So there is an equilibrium for that to be reached. And right now it's working very well. But yes, technically we could put anything. It's just that since we offer no slippage and very good trading conditions, we have to be careful about a few things and put a few limits, for example, on max open interest to prevent exploits. But we didn't have any problem with that, and everything has been calculated and planned in advance. And that's how we get to offer the best UX possible.
Got it. So you don't list up only assets and you don't list down only assets. There needs to be some uncertainty of what's going on, which makes me assume that you're not going to be having things like the ruble or the Venezuelan bolivar on your platform
Yeah,
anytime soon.
so it could create a risk for the platform if it's too easily predictable because of a fundamental event. For example, if there is too much inflation on a currency and it will go down, then everyone can open shorts and just take money out of the protocol, since the protocol liquidity is the counterparty to the trades. So it has to be fair. And since we do not create a market where we match, buyers and sellers, we are the counterparty, so it has to be fair. And that's how we get to offer this really superior UX. So for that, we have to be more selective for the assets we list. But don't get me wrong, we can really list the majority of assets. And until now, we even have the most assets of any decentralized leverage trading platform. So, and we should be able to list, as I said, pretty much all big US stocks, which is a lot. So yeah, that's pretty much it.
And when it comes to the prices, though, where do you guys get the price feed for your stocks?
So we use a combination of 5 premium APIs that our Chainlink nodes. Some of them work directly with Chainlink for the price feeds. And we worked with them to see what APIs they use for stocks, because there were already price feeds for stocks. It's just that our architecture needs a real-time price feed, so we have to rebuild it because the default Chainlink price feeds are great, but they are only updated like every 30 seconds or 5 minutes. It depends on the price feed. So I worked with our Chainlink nodes, which work directly with Chainlink for their feed, and we looked at which APIs they already use, since Chainlink has a very selective process for their APIs. So we thought it would be best to use the same as Chainlink uses. And we use a combination of 5 of them and take the median.
Very cool. This whole thing seems like a no-brainer to me. Why are you guys the first to be having these stocks tradable on your platform?
Well, it's because we have invented the only architecture which allows to list any asset without building liquidity for this asset or tokenizing it. Right now, if you want, you have perpetuals, which require a ton of liquidity, because for every market you add, so for example, Bitcoin, Ethereum, etc., you have to build an entirely new order book for this pair, and you have to find, liquidity providers, or rather market makers. That's how they are called. That requires a lot of capital, and you have to, incentivize them and everything. And it's really ineffective, in my opinion. Especially, so as I said, we take our prices on centralized exchange for the moment, so spot, and we only, and by the way, we can even use decentralized spot exchanges like Uniswap and everything. But I believe centralized derivative platforms, so with leverage, lose their use case with us, since they are a market on top of the spot market, kind of like us. We depend on the spot market, and of course the spot market will never disappear, since people will always want to exchange the real assets. Since that's not what we offer, you won't be able to buy a stock or sell it. So we depend on the spot markets, but this isn't a problem since it will never disappear. And that's the same for centralized derivative platforms. But since we have such a better model, in my opinion, they pretty much lose their use case. And so to come back to my main point, we are really the only platform and first platform to use an architecture that allows to list any asset by leveraging the same liquidity. Even decentralized competitors, most of them are perpetual as well, so they build in some way, in a way or another, order books also for each pair. Or even other synthetic competitors also require liquidity for each token. And even all of them, I'm pretty sure, borrow the leverage and have funding fees. So you have both funding fees and borrowing fees.
You mentioned the issue of building liquidity for stocks, or I guess stocks on crypto platforms. And
Mhm.
what comes to mind is a platform from maybe a year ago. It was on the Terra network. It was called Mirror. Do you know about Mirror?
I've heard about it, but I didn't have a lot of time to research it.
I haven't looked into it lately, but I think the reason that stock trading didn't take off is exactly for the reason you mentioned, is because they were originally trying to build liquidity by incentivizing trading pairs, whatever the stock was paired with ETH. Each stock you actually, I believe, held the token, like you held the Google token,
Yeah,
you held whatever,
yeah.
and it was traded
It
with
was tokenized. Yeah.
exactly. So I think once maybe the liquidity rewards ran out, the they didn't have the funds to back the stocks anymore once there were no
Yeah.
rewards left.
Yeah. Well, for leverage, at least, I believe our model is vastly superior since we don't need to tokenize stocks. And tokenizing stocks is not a good idea, in my opinion. It's pretty risky from a regulatory standpoint, since this is a tokenized version of a security, and trading securities is regulated pretty much everywhere in the world. So, but compared to us, we never tokenize any asset on the platform. It's only betting on the price, if you want. So already from that standpoint, in my opinion, our approach is really the best that can be offered. And also, of course, building liquidity for each pair is, compared to only having one pool of liquidity for every pair, is like 100x less capital efficient, because you have to incentivize, as you said, every pair. So it's much, much more costly to build liquidity, and the rewards have to come from somewhere. So either you print a token and it goes down in value and it's not sustainable. And if you have to incentivize from fees, if you have to divide these fees for each stock liquidity, it won't be a pretty big APR. So I don't see how that can work out. Whereas us, we only incentivize our GNS DAI liquidity and our DAI vault organically using the fees generated on our platform. And that results in a pretty big APR, since these fees from all these pairs go to only two pools, the GNS DAI pool and the DAI vault. So that's how we made it work organically from day one and without any unsustainable incentive.
Your unique architecture really unlocks a lot of possibilities. It makes me think of kind of the opposite case, which is the synthetics network or synthetics SNX. One of the main use cases that they mentioned when they were starting was that it would allow you to trade synthetic assets of any type. And one of those main things was they were saying, yeah, you could trade synthetic commodities or synthetic stocks. But until now, all they have is synthetic versions of crypto assets. They have synthetic ether, which I don't 100% get the point of that, because you could just hold the underlying. Whereas you guys seem like you beat them to it by listing already stocks now. Do you think the main reason why synthetics hasn't released synthetic stock trading yet is because of the things you mentioned, the issues of liquidity and the issues also of the legal regulatory issues, because they do issue a token?
Yeah, that might be a mix of both issues. I'm not sure exactly of the reason, but it should be something related to this. Yeah.
Cool stuff. Back to the stocks for a second. You're listing three initially: Facebook, Google, and Amazon, was it?
So Apple, Facebook or Meta, and Google.
Okay. How did you select those three stocks as your first ones?
Well, we picked from the biggest ones, uh, which are not the highest volatility. So it's like a beta launch where we launch with three, reliable stocks and big ones. And then we look at how it goes for a week, and then we will list also pretty big stocks, but we can go down in the market cap rank, so we get to offer more ones. And I think it's a good methodology to offer first the less volatile ones and to increasingly offer smaller ones.
Got it. And initially it's going to be 3, and then you said after that there's going to be 20. Can you give us some hints of the
Yes.
other?
I would say that's up to the community and everyone to guess.
Nice. And then after the 20, assuming this all works, which it should, is there going to be even more than 20 in the future?
For sure, for sure. So if nothing goes wrong with the beta launch and then the second launch, we will launch every US stock that we can list, which is a lot, really a lot.
Are you planning to restrict yourself to stocks that are traded on the NASDAQ or tech stocks, or will you branch into international?
So for the moment, we focus on US stocks only because that's where we have found the best APIs, and that's where there is we didn't have enough time to research international APIs. They are harder to find, and so we focus on US stocks for the moment. That's where we really master everything currently. And we spent a lot of months of research for these APIs already, and it's a very long selective process. So we're glad to offer US stocks already, but I don't close the door to international stocks. I will just have to see if we find great APIs and if we can make it work. But however, one interesting thing that I'm not sure yet if we will list them, but I've noticed our existing US stock APIs also support nearly all ETFs. So that could be something where we can list things from as well. But I haven't decided on that yet because some ETFs have fees and everything, and we have to make sure it makes sense. But it was a cool thing I noticed while testing the APIs, and I wanted to mention it.
Do you think that the crypto native community are interested in trading stocks on your platform? Or do you think they're going to say, oh, I'm just going to stick to my Doge, my Ape, my SHIB, Bitcoin, Ethereum, and so on?
As a trader, I will be really excited to trade stocks on chain like that with the amount of leverage I want. It's kind of crazy because right now, if you want to trade stocks, you have to register an account with a broker, do KYC stuff, deposit money there, be charged really big fees, funding fees, everything. Then you have to withdraw money from your account and it has to arrive to your bank account or something. So there is a lot of hassle in trading stocks right now on centralized platforms. And you have the price impacts. You have, the really great thing is we get to offer the same UX we offer, for example, on forex or crypto on stocks. So no slippage, no funding fee, no borrowing fee, low trading fees, and everything. And in a decentralized and where you keep custody of your funds. So right now, if I wanted if right now I decided to trade stocks on a broker, it will take probably a few days to set up and to test. I can deposit money, withdraw it, and of course you won't have access to anywhere near the amount of leverage you can have on our platform due to the liquidity efficiency we have. So even if you manage to create an account there and everything, if you're a scalper, for example, and you trade really small price movements, you couldn't even use the leverage you want. I believe most brokers only offer up to 5x or maybe 10x, but I'm not even aware, as far as I know, of any broker that offer more than 10x. So yeah, if you wanted to trade stocks with high leverage, let's say higher than 10x, I believe it's not even possible on centralized ones. And it's all the hassle of depositing money, withdrawing money, everything. And you have to trust them as well. And
So gTrade stock trading, you think could even appeal to people, just traditional stock traders, right? It has
for
all the
sure.
advantages without all the barriers and the fees and the wait time. I think, what is it, 3-day settlements?
Well, the wait time I mentioned was to properly set up your account and KYC and verify everything and withdraw the money. You know, this kind of administrative stuff takes time, and
Yeah.
it's
I was just thinking, I recently sold some stocks, and I believe it took 3 days to settle. After I sold the stock, I couldn't actually withdraw the funds until 3 days after, when it was considered finally settled. And that does not include weekends. So if it was done on a
mm,
Friday, it had to be extended until early the next week.
yeah, that's a great example, and I believe the UX on decentralized, especially the one that offers stocks on decentralized exchange, is terrible, and that's where DeFi can shine.
Well, just imagine back, remember with the GME craze, and also with what's that American movie theater chain? There's GameStop, and there was also AMC, the movie theater chain, and there's giant retail interest for these stocks. They all went on to Robinhood. There was this giant craze, Wall Street bets with Reddit, and everybody was trying to get in, and they were using Robinhood, and then they actually froze trading on those stocks. Do you think that gTrade is, or can appeal to that crowd and also solve that issue where people are just getting cut off because, I don't know, people on Wall Street are at risk of losing too much money, or just the arbitrary decisions of regulators?
So I just want to make something clear regarding that. There will be a few instances where we will have to pause the opening of trades, for example, right before earnings announcements and right before dividend distributions, because these are patterns that will be exploited using the good UX we offer with no slippage and the high leverage. For example, before earnings, you could just open a long and a short at max leverage, and you will be liquidated on one and gain like 10x on the other one, and you could do that every time. So this is something we have to fix. So the only fix we found, and it's really the best solution we have right now, is to pause the opening of trades a few hours before the earnings, which happens while the market is closed. So we will pause certainly trading, opening trades. Of course, closing trades will still be allowed, but opening trades will be disabled for 24 hours before. And then shortly after the news has been announced, because that's how we get to offer really the best UX. In 99.9% of the time, it will be an insanely better UX. And in the few edge cases, we have to pause the opening of new trades. Otherwise, the good UX we offer at all times can be exploited in such edge cases. But however, we wouldn't close how Robinhood did. I mean, the only thing we need to make sure of is that as many traders win as they lose, so that the equilibrium is maintained for the protocol. But we can, I mean, even if a ton of traders win in one day, for example, we have limits in place, so there is absolutely no problem with that.
So it
You
seems to
know,
me like there's no advantage on using these fintech easy interface stock trading apps when you have gTrade around. It just seems like gTrade is better in every way. Maybe not initially because it has a lower selection of different stocks, but in the long run, like, it just seems like it wins on all fronts.
yeah, for sure, for sure. If you, the only one that we didn't find a solution yet on how to offer it was if you want to trade news, like earnings and stuff like that. As I said, we have to pause for the moment, but we might even find the solution for that in the future, since it's still very early and the product is evolving. Uh, the trade-off we make is offering a really superior UX at almost all times. And then in a few moments like this one, we have to disable opening of trades. But of course, you can still close any trade you have. But 99.9% of the time, you have a 10x better UX than anywhere else. So that's where the tech is at the moment. And but I'm sure everything will even become better and evolve in the future. If you look at where we were like 6 months ago. You will be pretty amazed of what we have now.
For sure. Question about the price feeds, though. This is kind of related to a personal experience. So, crypto, we're used to it trading 24 hours a day, no breaks, never stops. If you go on gTrade, you're going to see the price changing all the time because it never stops. What's it going to look like for the stocks? Because we all know trades between, what is it, between 9:30 and 4 p.m. Eastern
Exactly.
time, and then not on evenings and weekends. So are we just going to see the price stay the same? Is there going to be trading allowed during the closed hours? How's that going to work?
So it's already like we have for forex, because forex has opening and closing hours as well. So it's open all the week and closes on Friday, I believe, or Saturday. No, I forgot now, but it's closed on the weekend basically. And when the market is closed, you can't open or close any trade, and the price doesn't move. So that's how we handle it. And it will be the same for stocks. So when the market is closed, you can't open or close any trade, just like on the regular market. And you can execute orders again when the market opens the next day.
Got it. So if I want to trade one of the stocks on the weekend, I can't also on gTrade, I can't trade it as well.
Yeah, exactly. Because
Got
we
it. Okay.
take our price feeds from the markets themselves, and we didn't find APIs for the moment for post-market and pre-market. And even that, these moments have very low liquidity and could be subject to manipulation and other issues. So for the moment, and I think it will stay like that, we offer trading during the regular hours of the market.
This all sounds very cool. It actually just kind of feels like a beginning, though. You guys have the crypto assets, you have the forex, you're now going to have the stocks, and you mentioned briefly maybe some ETFs. But are you going to branch out more than that? Do you have any plans for maybe commodities or indices?
Oh yeah, for sure. Commodities will be coming as well. We will try also to list indices, and we will also try to explore some cross pairs. That could be interesting. And we had even an idea once to make custom indices, like for example, for crypto, it would make sense. Let's say, for example, we could even list a pair that's 1/3 ETH, 1/3 BTC, and for example, 1/3 Matic token. And this way you will trade with all the same conditions and everything, the leverage, the low fees, and everything. But you will trade a custom custom index instead of an individual pair. And that could just be done by taking a weighted sum of these three markets or anything. We could make an index for example, I don't know, layer one cryptos or exchange cryptos or anything.
I wanted to get into some of the more technical things, or I guess about the collateral. Your platform works entirely on DAI. Is that correct?
Yes, perfect.
Why did you choose to go with DAI as the collateral?
Well, because it's the OG stablecoin really, and it's the one that's been out the longest and the most decentralized. So in my opinion, it was the least risky one.
Do you have?
And it still is, by the way, I think.
Yeah, from what I understand, it's a collateralized stablecoin, but it also can't be frozen like USDC or USDT can.
Yeah, exactly.
But do you have any plans to maybe allow other forms of collateral?
So yeah, we are starting some research to do a multi-stablecoin vault. Right now we have only DAI in the DAI vault, and multi-stablecoin liquidity as well for the GNS token, and that will allow us for sure to accept other forms of collateral for trades, for example, any other stablecoin. So, or maybe, you know, that I think about it, maybe even like Bitcoin or wrapped Bitcoin or stuff like that. So that's something that's very interesting. Yeah.
Yeah, I was actually thinking about it because I was on GMX lately, which I'm sure you know, and
Yeah.
They have a lot less features than you guys do, but I believe they allow you to trade perpetuals using the underlying. So like if you can use Ethereum to back or ETH to back your position on ETH or wrap BTC to back your position on Bitcoin.
Yeah, it's because they have liquidity for each token in their GLP, and there is an actual trade happening with the tokens in the liquidity, and that allows you to use different forms of collaterals for sure. And the main difference between us and GMX is so they're a synthetic exchange as well. They're pretty interesting. I would go as far to say they're superior than most other perpetual platforms as well. But where we innovated a lot is first, as I said, we have the GNS token, which is used as liquidity for every pair, which is not the case on GMX. It's a very interesting model. However, you have to add every crypto listed in the platform. You have to have liquidity on it and you have to add it in GLP. So for example, let's say you want to list stocks with their model, you would have to tokenize stocks. Or let's say you want to list, let's say Doge, maybe you have to, it wouldn't be so wise to force GLP holders to hold Doge if they don't want to, because it's a basket of assets. Their liquidity providers provide let's say one GLP is X% BTC, X% ETH, etc. And it's all the assets listed on their platform. And maybe they don't want to hold Doge, but traders want to trade Doge. So I see a problem there. And as well for stocks, they have to tokenize them and everything. And any asset they want to list. So that's where we shine. And also the leverage is actually borrowed. So let's say, for example, you open a trade at 20x with $1,000, you have to borrow 19,000 and it has to come from their liquidity. That's why they have borrowing fees.
Got it. So completely different architecture and kind of runs to the same problems that you mentioned before.
Yeah, but I would say much more interesting than perpetuals already, because they use also Chainlink. But our architecture, I would say, is even one level above that.
Very cool. Very cool. I actually planned to ask you at the beginning of this interview, but then I got excited about the stocks and I thought everybody would want to hear about them first. So I wanted to just go back to, we haven't spoken, I believe, for about 3 months. And I just wanted to ask you, how have things been going with Gains Network in those past 3 months? Can you give us maybe some numbers or some figures? How many people have been using the platform, the total traded daily, and so on?
So I don't know that by heart, but I can tell you what I have been working on. So I will check our June dashboard quickly to see the stats. But mostly our volume has been growing very well during the last months, and the liquidity as well. So if we take a look at the stats, maybe the last few months, it has been a little down, mostly because of what Bitcoin has been doing. So the market is not that enthusiastic right now. So locally, some stat might have gone down for like 1 month, the past month or something. But if you take the long-term trend, it's really a healthy trend going higher for the volume and fees generated and the liquidity and everything. And also one interesting thing in the June dashboard is you can see the volume traded in DAI for all pairs. And I'm glad to see that Bitcoin and Ethereum, for example, only make up like 20% of the volume or so. And the volume is very well distributed on all the pairs we have. So it's not like our use case is offering all cryptos, but traders don't use them. They actually use them, and altcoins represent the majority of our volume. So I'm glad to see that every market we add really adds to our volume potential.
Well, I'll tell you about kind of an embarrassing mistake I made that contributed to the stat you mentioned. I wanted to, I think it was several months ago when the market crashed, and I wanted to long Ether at the bottom. So I went on to Gains Network, and by mistake, I chose Ethereum Classic.
Okay. So, yeah, that's really the same.
It went up too. It went up too. I had a small win, but it was not the asset that I originally wanted.
Yeah. So yeah, but Ethereum Classic sometimes has these weird pumps, you know. So
For sure, for sure.
so it's been a lot of work. First for regarding the UX and the UI and everything. So we've done a ton of work on our custom backend we have, and on the front end as well. We've done a ton of optimizations. So the backend really what's really interesting about that technically is since the Polygon RPCs sometimes have problems, we had to invent really a new architecture once again. And so we have a server running that feeds all the information from the chain to the front end, to the website. But the connection to the blockchain is not the one from MetaMask, the RPC in MetaMask. However, it is the case on most other platforms. They just use the connection from MetaMask to fetch information from the blockchain. And if the RPC you have in MetaMask has a problem, which can be often the case in any chain since these RPCs are public, then the website won't load. And what we invented, or let's say it isn't that revolutionary, but I think it's not widely used in crypto projects, and it's a very big positive point we have. We have a custom backend running that's connected to private RPCs, so they are higher performance and more reliable. And they get the data from the blockchain, for example, for all trades happening, for every order on the platform. And they stream the information directly to the front end, but the front end doesn't connect itself to the blockchain. It just uses the information from the backend, which allows us to have very fast loading times on the website and a very reliable user experience compared to if we use the RPC in MetaMask. And that is really a ton of work. We did a ton of optimizations on that. And yeah, so it's really going in the right direction for this. And the UX has improved a lot. And our traders have told us they are very happy with the experience. So that, and also I've been focusing on creating on working with more people, because until a few months ago it was just me doing everything. So I have built a marketing team that has a marketing strategist, a writer that does all our articles and tweets, and a designer as well. And for the moment, I still manage everything, but it's getting much, much better, and we are able to scale really properly like that. So it's a very interesting thing. I'm glad I decided to work with more people, and I think I will only keep going more in this direction. And I have hired also a backend dev. I am working with a backend dev now, and a front-end dev as well. So I am making the team bigger.
So Gains is one of the hardest working teams, if not the hardest working team in DeFi, maybe. It seems like you guys are constantly shipping new stuff.
Yeah, I mean, we do our best, but it seems we have a pretty fast pace compared to most other projects.
So about the GNS token, can you tell us what that's all about and how that token's been doing?
So the token, the core use case, the reason it exists really is to be minted and burned in our trading platform, because in the end, GNS is the counterparty to all trades. And so the architecture has multiple layers. The first layer, the layer on top is the DAI vault. So when you trade, you interact with the DAI vault only. And when you open a trade, your DAI goes to the DAI vault. And when you close it, the DAI is taken from the DAI vault and sent to you. But if the DAI vault, let's say, is under collateralized, so let's say there is 5 million deposited and it only has 4 million because someone won 1 million, Then it has to refill it by minting GNS and selling it in the GNS DAI liquidity pool. So the GNS DAI LP is right under the DAI vault, is the layer right under the DAI vault. And at the core of everything, we have the GNS token. So on the contrary, if more traders open trades or lose, the DAI vault will be over collateralized and it will start buying and burning GNS slowly over time using the DAI vault. The DAI vault's use case is to smooth that volatility over time, whether for selling or buying. So whether minting and selling or buying and burning.
So is it true that the GNS token is deflationary in that case?
Yes, it is the case. Until now, we have 6 months of data. And as on any platform, it is a statistical fact that most traders tend to lose. But compared to centralized platforms, for example, all losses by traders are redistributed to the GNS token via buys and burns. So it directly benefits GNS holders and flows back into the ecosystem. And even if you are a trader, it could be an interesting hedge to have some GNS. That's a cool use case I thought about. And it's kind of an insurance against losing, since any trader losses would go into deflation, which makes the GNS tokens scarcer. So the answer is yes, it is deflationary, at least until now. And we have quite a lot of data to support that.
What's the rate of deflation? What kind of APY could I be expecting on my token?
So the deflation right now has been pretty high. So the current rate of deflation, if we extrapolate the last month to a year, will be 20%, but it's rather high. So usually it's more about, like 5-10%. But that's like the icing on the cake. Really the main APY for the GNS token is the trading fees. So most fees generated by the platform flows back into the GNS DAI liquidity. So if you stake there, currently you earn about 50% APY, I believe, 40%. It depends on the volume. Sometimes it goes as high as 100% APY. And that's how we generate the organic APY for the GNS token. So for the month, you have to pair it with DAI and provide liquidity, and you earn the 40% APY, and there is even the deflation on top of that, which is kind of crazy. I think there isn't any other token that earns an APY 100% organic from fees, and on top of that has organic deflation as well.
Do you have any plans for single-sided staking?
Yes, for sure. So the idea, the roadmap we have is to use the fees we earn to the project fund and buy liquidity with that, and to progressively own more and more of the GNS DAI liquidity. So the protocol wallet takes the impermanent loss, and we can using that we can redirect all the APY to GNS single staking. So you could stake GNS and earn the APY from trading fees on top of the deflation and without risking impermanent loss. Yeah, so that's the idea.
Got it. On the topic of token and staking, there was a really popular article released a couple days ago, or maybe it'll be a week by the time that this interview is out, by Kobe talking about ApeCoin and the death of staking. And in that article, you have a tweet image, or I guess meme, that sums it all up by Degen Spartan, where he says, it's Leonardo DiCaprio explaining something. He says, okay, we'll call it staking, but actually it's not. And it's just rewards for not selling your coins, so I can do it first. And it's kind of it's referring to this phenomenon that is happening in a lot of different projects, especially with big VC backers who have these large token allocations and large unlocks, where they try and get users to lock their tokens in these contracts they call it staking, but the only thing it's doing is not selling tokens. And like the VCs are dumping on them. Do you guys have any VCs or backers with giant amounts that you think are just planning to
At least
dump on this?
we didn't work with any VC, so if one is invested in a project, at least I'm not aware of it, and it shouldn't be that big of a wallet, since we will probably have noticed. But from the start, it has been a fair launch. So we gave all the JFarm2 tokens, which were the first token before we migrated to GNS with a 1 to 1000 token split. So we gave all GFarm2's tokens for free on in a ETH pool. You simply staked ETH and received GFarm2 tokens, and then there was another pool for GFarm2 ETH liquidity where the rest of the supply was distributed. And right now there is no more inflation from that, and all the supply was given organically and fairly to the first users of the platform. So there is no VC or any stuff like that. And
Got
that's
it.
kind
So
of interesting, the staking you mentioned. It doesn't create any value. You just receive more tokens for keeping your tokens. So in the end, it's just the holders paying, it doesn't create any value. So you just inflate the token to have more, but it doesn't make any sense because the token holders pay it because they get diluted as well. So, and as you
for
said, it
sure.
might be a trick to keep them staked while VCs are dumping. I didn't even think about that, but it could be that vicious.
So you guys are fair launch. You don't have any VC backers behind the scenes, and your vault is actual income generating.
Yes, so the DAI Vault earns 8% APY at the moment with 5 million TVL, and the GNS DAI liquidity 15 million TVL with 41% APY. And current deflation rate is 21%.
The GNS DAI pool or vault, what are you earning that APY in?
In GNS. So the fees are taken in DAI. So sometimes we get asked like, why do we receive the reward in GNS? It's because we prefer to send the fees, the actual fees, where the APY comes from to the DAI vault. So it's fuller. And then we mint the equivalent GNS to the LPs. And since the vault, when it's full, when it's over collateralized, burns GNS, it's a zero sum thing.
So 1 minute. The DAI vault, you get the APY in GNS, and also
the DAI vault you get in DAI. But
okay,
the
DAI vault
GNS DAI liquidity you get in GNS.
Got it.
Because we prefer that.
Okay. When it comes to decentralization, can you talk about your decentralization efforts and roadmap?
So I will say that creating a team for marketing and development is already a first step towards decentralization. And that's one of the core values of our platform is the decentralization. So later on, we want to transition the whole protocol to a governance model, and it will take quite some time because we want to do it well and not introduce new attack vectors, and we want to make sure everything is done properly. But that's a roadmap I 100% commit to. My real idea behind Gains Network will be that it's kind of a growing and growing entity that, like, via governance, pays teams to work on products and even to create new products. And then the fees from these products flows back into the GNS token. So, it's like an entity controlled by the GNS token or a derivative like VGNS, like, V tokenomics. And the only goal for the GNS token holders is to bring back more revenue for the GNS token, like in any business. So it will be something where we define all rules and we make it, we create the right incentives so it can develop by itself. That will be my dream vision, where the governance could take care of itself and pay competent teams to build products take care of existing products, and create the best UX for users to bring more revenue to the GNS token. Just align the incentives perfectly so that it's a self-growing thing and it can prosper by itself. That will be my dream vision.
Nice. I like it. I wanted to ask though, right now you guys have gTrade on Polygon. And
Yes.
the perception of Polygon's great, but the perception of it in the crypto space, from my understanding, is, it's kind of a cheap chain. It's used for low value transactions, little games here and there. There's something like Sunflower World. And whereas more serious, high value transactions, they're on a layer 2 or side chain, should be on something like, it seems like Optimism or Arbitrum, where you're finding all these different options platforms. Do you have any plans to expand to different L2s or sidechains?
So yeah, that's something we were thinking a lot about. So first, Polygon recently announced something very interesting, the super nets. I don't know if you saw it.
No, I didn't see it.
It will be independent chains for each project, and they can communicate with each other. And the chain itself could be like a small proof of authority setup with a few validators, or you could use a validator set from Polygon that will be a little higher decentralization. But I wasn't that interested in that because it's even lower decentralization than the Polygon POS chain right now. But they announced that you could do also rollups and validiums on these chains. And that is very, very interesting because that will be comparable to something like StarkX, where DYDX is running. And that will mean, for example, a project like us could have its own chain that's a layer 2. So inherits the security of Ethereum, and we can even choose to be a validium when the data availability is on Polygon Avail, for example. So we inherit the security of ETH, but the data will be on Polygon Avail, which I believe doesn't reduce the security. It only makes, it only creates a risk for censorship. So if it doesn't compromise funds, the worst thing they could do, I believe, is just hide the data, but you could get it in any case in some other ways. So that will mean very, very high throughput, very low fees, and the security of ETH. So that's something I am very excited about. And I seriously consider this for the platform. And the goal, in my opinion, is just to have gTrade on the most interesting chains. So until now, it has been Polygon for us. It has worked really well, and the fees have been cheap. So for our use case, it was very important for the Chainlink oracles we have. But it's true that the perception around the Polygon chain right now is not the best. And in my opinion, it is causing problems to our adoption. And there are a lot of users, for example, that are on Arbitrum that don't want to go to Polygon for some reason. I am not saying they're right in any manner, but it is something we have to accept and just deal with it, because we can't just be blind to the reality that a lot of whales are on these true layer 2s like Arbitrum, Optimism, etc. And we can't just restrict our growth and stay on Polygon for no reason. So in that matter, I really consider, we really want to explore Arbitrum as a next potential chain. We are doing the research now, and that is something very strategic for us as well, for many reasons. And but as I said, I am as interested in Arbitrum as the Polygon supernet, for example. But the idea we had, and we decided with really the OG community of the project, is we don't want to limit ourselves to the Polygon POS chain only. In any case, it doesn't make a lot of sense. So after deciding that, we will just look at the most interesting solutions and deploy there. And I think it will be a mistake to stay only on one chain, because we thought we thought users will just bridge between chains and everything, but some users like their chain so much that they won't ever bridge to another one. Or maybe there is another decentralized leverage trading platform on this chain that can have a worse UX than us, but still, since it's there, people will just stay on their chain and use it. So why would we lose users for not being on this chain while we offer a better UX? Just because people don't even think about bridging to Polygon and can't realize we have a better UX. So we can't just leave them all users for free like that. So yeah, that's pretty much where the state of things are for this.
Would it be safe to say that in the near future or near-ish future, we could expect to see gTrade running on multiple chains at the same time?
For sure. We never want to leave the Polygon 2S chain because it's a wonderful chain for, let's say, if you want to trade with like 10 DAI or something like that, and you don't want to pay $1 or $2 fees on each transaction, it totally makes sense to use Polygon in that case. And even for higher amounts if you like it. But we realize that some users just will never come to Polygon to try our platform. And since there is already other decentralized trading platforms on these other chains, even if they have an inferior UX, some people will just be happy with that and won't take the effort to bridge to another chain to try it. So that's our role to go to these chains and help grow the adoption.
Very cool. When it comes to roadmap, you talked about, okay, the stocks come out, the 3 stocks. Then after that, you get the 20 more stocks. What else is on the horizon in terms of developments and in terms of events, competitions, and so on?
So more stocks, of course, commodities, indices, maybe some cross pairs. We can experiment with that. There is the V7 of the protocol coming, also not too far until the end of the year, which will have partial adding and closing. So you can add some collateral to a trade or close it partially and take some DAI without closing it all at once. And before that, of course, there will be GNS staking. That's something we are very committed to. We want to own more and more of the GNS DAI liquidity with the revenue we get from the project wallet. And GNS staking will be big. There is a lot of people waiting on that. And until now, for a good reason, we've been focusing on adoption and growing the volume since our APY will be fully organic. If there is no volume, you don't have any APY on your GNS staking. So it made sense to focus on growing the platform until now and until the next few months. But GNS staking is coming very, very soon as well, as soon as possible. Oh, by the way, we have a roadmap on Medium. If you go to our, so for example, to gains.trade, gTrade is on the gains.trade website and gainsnetwork.io. So gTrade is the trading platform where you can trade with leverage, and the staking, bridges, and everything regarding the token and liquidity is on gainsnetwork.io. And on either website, if you click at the very bottom, there is a M logo for the Medium. If you click there, you can find our Medium, where we post a lot of interesting articles really often. And there is the roadmap as well with all the details.
Nice, very cool. We'll make sure to keep track of that. Any final word to listeners?
I think it's a very, very interesting time for DeFi, and I'm proud we are the first to offer stocks trading with leverage on chain. I mean, it's a huge milestone for the whole DeFi ecosystem, and I am so proud. We are the first to offer that, and I am grateful to our community, which has been so great, and it's just an amazing time to be in DeFi.
Nice. I'm hyped up. I just want to yell, let's go. Awesome. Very cool stuff. Very cool stuff. Thanks for the chat.
Great time, man. Thanks for having me.